Hello everyone, and welcome back to your daily crypto market update. It is Thursday, July 3rd, 2025, and the question on every trader's mind today is a simple one. Is this the deep breath before the plunge, or the quiet accumulation before the next explosive leg up? The charts are telling a fascinating story, filled with tension, potential, and a whole lot of indecision as we head into a critical 24-hour period for the global economy. We have a lot to cover, from Bitcoin's assault on a monumental resistance level to Solana's continued defiance of gravity. So let's get right into it. But before we do, please remember that none of this is financial advice. This content is for informational and educational purposes only. The crypto market is highly volatile, and you should always do your own research and consult with a professional before making any investment decisions. My goal here is to share my perspective on the data and the news, so you can be better informed on your own journey. Alright, let's start with the big picture, the 30,000-foot view of the digital asset space. The total cryptocurrency market capitalization is currently sitting just shy of $3.5 trillion, up about 1.5% over the last 24 hours. It's not a massive jump, but it's the nature of the slow, grinding upward movement that's interesting. The Bitcoin dominant index is holding steady at around 54%, indicating that while altcoins are seeing some nice pockets of green, the market is still very much looking to Bitcoin to lead the way. When we look at the crypto fear and greed index, it's currently flashing a greed signal, sitting at a reading of 68. This is down just a few points from yesterday's 72, which suggests that while optimism is still the prevailing mood, a little bit of caution is creeping back into the market. This makes perfect sense given the context. Traders are feeling good, but they are not euphoric. They are buying the dips, but they are also keenly aware of the major economic data point looming on the horizon. And that brings us to the macro environment. The entire financial world, from Wall Street to London to Tokyo, is holding its breath for tomorrow's United States non-farm payrolls, or NFP, report. This is one of the most significant indicators of economic health, and it will have a massive influence on the Federal Reserve's next move regarding interest rates. The consensus forecast is for a slight cooling in the job market. If the number comes in hotter than expected, it could signal persistent inflation, potentially spooking markets into thinking the Fed might delay rate cuts or even, in a worst case scenario, consider a hike. If the number comes in much weaker than expected, it could raise fears of a recession. The sweet spot, the Goldilocks number that the market wants, is a figure that is slightly below expectations, showing a gradual cooling that would give the Fed the green light to continue its accommodative policy. Until that number is released tomorrow morning, we can expect this tense, low volume consolidation to continue. Crypto, more than ever, is tethered to these traditional market movers, so tomorrow at 8:30 AM Eastern Time is a major event to watch. Now, let's drill down into the king, Bitcoin. At the time of this recording, Bitcoin is trading at approximately $115,450. Over the past day, it's been in a tightrope walk, oscillating between 114,000 and 116,000. The real story, however, is what's happening on the higher time frames. For the past week, Bitcoin has been methodically chipping away at the formidable resistance zone between 117,000 and the big, psychological $120,000 mark. This level represents a peak from the rally back in May and has proven to be a heavy line of sellers. Every time we've poked our head above 117,000, profit takers and short sellers have stepped in to push the price back down. Looking at the technicals, the picture is one of cold energy. The relative strength index, or RSI, on the daily chart is sitting at around 60. This is in bullish territory, but it's not overbought, meaning there is still plenty of room to run to the upside before conditions become too frothy. The MACD, or Moving Average Convergence Divergence Indicator, is showing a bullish cross that occurred a few days ago, but the momentum is starting to wane as it hovers just above the zero line, reflecting this period of consolidation. The key levels to watch are crystal clear. Our immediate support lies at the $112,000 level, which coincides with the 21-day exponential moving average. This has been a reliable floor for price during this recent uptrend. A decisive break and close below this level on a daily candle would be a bearish signal, potentially opening the door to a retest of the major support zone around $105,000. To the upside, the mission is simple: break and hold above 120,000. If the bulls can manage to flip that massive resistance into support, There is very little historical price resistance until we start approaching the $135,000 area. Tomorrow's NFP data will almost certainly be the catalyst that decides whether we test support or break resistance. Next up, let's talk about Ethereum. The world's largest smart contract platform is currently trading at $8,120. ETH has been performing admirably, actually slightly outpacing Bitcoin over the past few days. ETH/BTC ratio, a key metric for determining altcoin season strength, has been slowly climbing and is attempting to reclaim the 0.071 level. A sustained move above this could signal a new wave of capital flowing from Bitcoin into Ethereum and other large-cap altcoins. On the ecosystem front, the narrative around Ethereum remains incredibly strong. The recent Prog network upgrade has gone off without a hitch, further improving the staking and withdrawal experience, and developers are already deep in discussion for the next major upgrade, codenamed Osaka, which promises to bring significant improvements to data availability and scalability through EIP-4844 enhancements. On-chain data shows a healthy uptick in daily active addresses, and transaction fees on Layer 2 solutions like Arbitrum and Optimism remain low, encouraging more users and applications to build within the Ethereum ecosystem. This fundamental strength is providing a solid foundation for its price. From a technical perspective, Ethereum is in a similar position to Bitcoin, albeit looking slightly stronger. It's currently consolidating right below its key resistance level at $8,500. A breakup of this would be a major psychological victory and would likely trigger a rapid move towards the $9,000 mark. Support is strong at the $7,800 level, which has been tested and held multiple times over the past week. A break below that would be concerning and could see us revisit the support band around $7,400. Like Bitcoin, Ethereum's fate in the short term is tied to the macroeconomic winds. A positive reaction to the NFP report could easily provide the fuel needed to smash through that $8,500 ceiling. Now, let's shift our focus to one of the market's star performers of late, Solana. SOL is currently trading at a blistering $315, up an impressive 5% in the last 24 hours alone. While Bitcoin and Ethereum have been consolidating, Solana has been in a world of its own, demonstrating incredible relative strength. It is completely decoupled in the short term and is being driven by its own powerful ecosystem narrative. The primary catalyst has been the continued successful testing and phased rollout of the Firedance client, developed by Jump Crypto. Firedance promises to dramatically increase Solana's transaction throughput and network resilience, addressing the two biggest historical criticisms of the blockchain, scalability limits and its past outages. The market is pricing in a future where Solana can handle a truly global scale of applications without breaking a sweat. This, combined with a renaissance in the Solana DeFi and NFT space, with projects like Tensor and Jupiter seeing record volumes, has created a perfect storm of positive sentiment. We're also seeing a surge in meme coin activity on the network, which, while speculative, is undeniably driving a huge amount of user engagement and transaction fees, further bolstering the bullish case. Looking at the chart, Solana is a thing of beauty for bulls. After breaking out of a long consolidation pattern at the $260 level, it has sliced through resistance with ease. It blasted past the psychological $300 mark yesterday and hasn't looked back. At this point, SOL is in a state of price discovery on its current run, meaning it's carving out new highs with little historical resistance to stop it. The nearest point of interest is its previous all-time high from the last cycle. The key for traders now is not to get caught up in FOMO. The RSI on the daily chart is pushing into overbought territory, sitting above 75. This doesn't mean it can't go higher, but it does signal that a pullback or a period of consolidation is becoming increasingly likely. A healthy retracement to retest the $300 or even the $280 level as new support would be incredibly bullish for the longer term trend. For now, the momentum is undeniably with the Solana bulls. Finally, let's round things out with a look at XRP. The digital asset from Ripple is currently changing hands at around 95 cents. XRP's story, as it so often is one of a slow, patient grind against a key psychological barrier. For what feels like an eternity, XRP has been battling the $1 resistance level. It has had multiple failed attempts to break and hold above it, often getting rejected back down into its long-standing range. Unlike Solana, XRP's price action is less about ecosystem hype and more about its core utility narrative and Ripple's ongoing business development. The latest news driving some positive sentiment is the announcement of a new partnership with a major fintech consortium in Southeast Asia to establish a new on-demand liquidity, or AUDL, corridor for cross-border payments. These kinds of real-world adoption announcements are what provide the fundamental floor for XRP's value. However, the market at large remains somewhat hesitant, waiting for a truly monumental catalyst, perhaps related to further regulatory clarity in the United States or a partnership with the top-tier global bank, to truly unleash its potential. From a technical analysis standpoint, XRP is a textbook example of range-bound trading. Its major support zone lies between 85 and 88 cents, a level that has held firm for months. On the upside, the ceiling is that formidable $1 to $1.05 region. A decisive weekly close-up of $1.05 would be the signal that long-term holders have been waiting for, potentially triggering a significant rally towards the $1.30 mark. Until then, it remains in this compressed state. It's a coiled spring, but unlike the rest of the market, which is waiting on macro data, XRP is waiting for its own unique catalyst. So, to summarize, we find ourselves at a fascinating crossroads. The market sentiment is one of cautious optimism. The charts for Bitcoin and Ethereum are primed for a major move, but are waiting for direction from tomorrow's crucial NFP report. A market-friendly number could ignite the next leg of this rally, sending Bitcoin towards $120,000 and Ethereum towards $8,500. In the meantime, Solana is charting its own course, fueled by powerful ecosystem developments, though it might be due for a healthy cooldown, and XRP continues its patient wait, building pressure within its long-term range, hoping for a fundamental catalyst to break it free. The stage is set for a very eventful end to the week. Keep a close eye on those key levels we discussed and be prepared for a potential spike in volatility. That's all for today's update. Thank you for tuning in. We'll be here again tomorrow to dissect the NFP report and its impact on the crypto markets. Stay safe, stay informed, and have a great day.